Hey, welcome everyone to the Story Trading Weekly Meetup. We got another great presentation tonight. Tonight we got Richard Chu over here to present I think it's his top pick. We'll see in GoodRx. But first, a quick disclaimer: Story Trading is not an investment advisor, and that goes for all of our guest presenters unless they state otherwise. Investing in securities involves significant risk of loss. This presentation is being recorded. As I said, it'll be made available to our VIP members throughout the rest of this week, and then we'll publish it on YouTube and on social media next week. For those of you who are not familiar, what is a story trade? Story trading is the art of understanding market pricing through the lens of the four pillars of fundamentals, catalysts, sentiment, and technicals. We've done an incredible job in our community, making a ton of money over the last 2 years with our tight-knit small group of people on WhatsApp and on Zoom, and we're looking to now scale that experience to the mass market. So we have an app that's in private beta testing right now. It's going to be the place to discover, collaborate, and validate market-moving information through crowdsourced research and social collaboration. Please make sure to go to StoryTrading.com and put your email address in so you can be on the wait list to get that invite code when we're ready to do that. Now, what we have here when we do these Zoom presentations, we keep track of those. We call those VIP picks, and they've been dramatically outperforming the market. If you go to our website and click on VIP picks, you'll see a spreadsheet there, and you'll see across about 55 picks, we're doing like 2 to 3 times better than all the major market indices. So congratulations to our process at Story Trading and the people who are coming here and showing their conviction to our community. Because we've had so much success as of late, we've been in the news and for AR test systems, AEHR, on Benzinga several times, and actually went into the news feeds on broker apps. So we're getting inundated with requests for people to present their ideas to Story Trading. So we're streamlining that process. If you have a stock you want presented at Story Trading, you go to storytrading.com/submit VIP to do that. So tonight, again, we got Richard Chu over here. You can follow him on Twitter. He's going to be presenting Goodrx last trade, GDRX last trade, $47.16. It's a $18.67 billion market cap company. Before I turn it over to you, Richard, I just want to show the historical chart, because what we try to do with story trading is through this crowdsourced research, through the understanding of the catalyst, the sentiment, and the fundamentals. And I imagine you're going to be spending most of your time, if not all of it, on the fundamentals tonight. By looking at these 4 pillars of data, including the technicals, we seek to understand the history of the stock price, and that can give us as investors and traders huge advantages in when to enter, how to react to news, how to react to catalysts, when you understand how the market is pricing in previous news and catalysts and fundamentals. So those are our 4 pillars: sentiment, catalyst, fundamentals, and technicals. And with that, Richard, I got your slides up here. You can go ahead, and I think you should have the proper settings to be able to unmute yourself or video. Welcome, Richard. How are you?
Good. How are you?
Doing great. We're doing awesome. The market's been crazy. We just got off our very first Twitter Spaces talking about DWAC. Our community made a ton of money on that last week, but we're now ready to settle down and talk about a real stock. So tell us all about Goodrx.
Yeah, I mean, it's nice to be back. I think you guys made a great call on like AEHR and DWAC as well. So definitely really happy for you guys that you're all making money. And this is my second time coming back here on Story Trading. Goodrx currently is where I have about a quarter of my portfolio allocated.
Oh, wow.
So it's my top. Yeah, so it's my top pick right now. I mean, it's a large cap company, so it's not necessarily as speculative as some of like the smaller caps that I also liked in the past. But I think it still presents a lot of potential for upside as well. Should I share my screen on or
yeah, if you want to do that, might be easier.
Okay.
Yeah, let me just stop my share.
Or do you want to like present it on like the PowerPoint? Do you have it or?
Actually, I can't figure out. Yeah, we can just tell me when to advance it. How about that?
Okay.
All right. You see my screen?
No, I
Oh.
guess.
Oh. Oh, there you go.
Yeah.
Okay, you're sharing it. Good. Go
Yeah.
for it.
Can everyone see it now?
Oh, I guess I wasn't
Okay.
sharing my screen earlier. Oh, well. All right.
All right. One sec. All right. So Goodrx is a digital health company. You guys, if you're American, you may have used it in the past. So it's essentially a prescriptions discount marketplace where you can get up to 70% or up to like 80% off your prescriptions. And I think one of the main reasons, to give you guys a background of how the complex the healthcare system in the US works, one of the main reasons for GoodRx's existence is the fact that drug prices, they can differ dramatically between pharmacies. And the reason for that is this really complex sort of web of relationships in the pharmaceutical value chain. I'm going to try and simplify it as much as possible. So essentially, if you're uninsured, you pay these cash prices when you go into the pharmacy. And these are really, really inflated prices that GoodRx essentially gives you like up to 80% discount off of. And the reason why these very high cash prices came to be is because pharmacies, after they source their drugs from wholesalers, they are presented with three prices. So the first price is the cash price. This is the only price that they are able to set. They're able to set themselves. So this is like essentially sort of, if you're uninsured, you can go into pharmacy and you pay the cash price. The second price is the MAC price. So this is the price that the PBM, which are like pharmaceutical benefit managers, they are able to set, and they like by virtue of negotiation with the PBM in order to get insured members, like their insured members to use your pharmacy, you have to accept their MAC price. And the last price is the average wholesale price. So in terms of reimbursement, because when you dispense a drug, you have to get reimbursed by sort of the PBM if the person who's using it is under their plan. You have, like, they are able to take sort of the lowest price between all three of those, or sort of they take sort of the highest price between all three of those prices. So that's why they usually set the UNC price, which is the cash price, above all of them. And essentially what this means, like, I know it may be confusing, but essentially what I'm getting at here is that pharmacies, because they set sort of the cash price above all the other prices, that means that they're able to maximize reimbursement. And the PBM coming in with their MAC price, they essentially are able to, I guess, get the like sort of a discount, an arbitrary discount off of the cash prices that the pharmacy set. And that's where, the PBMs create value. Where the PBMs make money is that they make money off the spread between the MAC list that they give the pharmacies and the MAC list that they give the payers. So the payers are the insurance companies that you pay a premium to. And that sort of spread is captured by the PBM, and that's where they make most of their money, and they reimburse sort of a fill fee to the pharmacies per transaction, which is like a $5 to $7 small fee that they get for filling it. And that's where sort of, I guess, it creates a discrepancy between the different pharmacies, because these MAC lists that the PBMs give to all of these different pharmacies, they're totally different. So there's absolutely no transparency in terms of the sort of the prices that they give each of the pharmacies. And that's where you see like a lot of the prices for even like a single drug differing by like dozens of dollars. And what Goodrx does, it gives uninsured people access to these PBM negotiated rates. So normally, the price that you would get only if you were one of the PBM's members, you would be able to get a similarly low price if you're going through Goodrx. So that's where you see them getting like a lot of these values. So what Goodrx does is they partner with over a dozen PBMs, and they sort of show on their website. You can go on their website or you can go on their app. They show the lowest MAC price. So this is again the insured price that you can get across all of the different PBMs. So that lowest price that you're able to get, that's not only from one PBM, that's from like across all dozen of them. And because like the prices can differ dramatically between them, it really creates value in having that sort of marketplace dynamic where you're getting sort of the lowest price between all of these different PBMs, which which after all of their different MAC lists that they give their pharmacies. So Goodrx right now, they have a bunch of sort of like product solutions. Their core one, which forms around 80% of their revenue, is their prescriptions marketplace. So that's what we just covered. They essentially allow you to compare prices across 70,000 different pharmacies. So basically all of the different pharmacies across the US, and get sort of lower prices on drugs, both for uninsured people as well as insured people. The other sort of solutions that are adjacent to that, they sort of play off it. So if you look at their content, which is the newest sort of solution, it's basically Goodrx Health, which is kind of like similar to WebMD. It shows sort of articles and videos on different conditions, as well as how to improve your health. As well as they have their own Health Nation, which is like a producer of these blogs, like of these videos that you can access and just learn more about your health. So that's more of like a top of funnel customer acquisition channel for Goodrx to sort of funnel people into their prescriptions. And then they also have their subscriptions. I mean, their subscriptions business, which essentially is these Gold and Kroger plans that you can sort of take advantage to get even bigger discounts. So essentially the way it works is it's similar to their prescriptions, except it's instead of like a dozen or so PBMs that you use for their core prescriptions business, they use a smaller subset of those PBMs who are willing to provide even better prices in return for like certain guarantees on volume. And if you're on one of these plans like Goodrx Gold, it's relatively cheap for like a family plan. It's like only $10 a month. As well as Kroger, you can get even bigger discounts. You can get stuff like free telemedicine visits or like very discounted telemedicine visits and free mail order. And they have their telehealth business, which is Goodrx Care and sort of a Goodrx marketplace. So Goodrx Care, they acquired Hey Doctor, which was a small telemedicine company back like around 1 or 2 years ago. And Hey Doctor is still like very, very small in terms of the run rate. I believe it's around like 30 million or so. So it's very, very small compared to the rest of the business. Essentially, it's another customer acquisition channel that you can, go on Hey Doctor and you can pay for cheap telemedicine visits, and then they'll directly refer you to the core, Goodrx prescriptions marketplace, as well as their Goodrx telehealth marketplace. So that is sort of also like a very, very small component of their business, where you can essentially go on there and you can compare different prices for different telemedicine services, like Teladoc, like a visit through Teladoc, a visit through sort of Goodrx Care, and other, direct-to-consumer telehealth sort of platforms. And you also have their pharma manufacturer solutions business. And this is where I see sort of the most upside currently. So it's still like a very, very small sort of percentage of their business. I believe it's like no more than, like $60 million in revenue run rate like this year. So it's still a very, very small portion of business, but it is also the biggest potential because it's essentially advertising. There is, $30 billion spent on pharma advertising to like every single year, and around 10 billion of that is being spent on direct-to-consumer initiatives, the majority of which is on TV. But Goodrx, with their core prescriptions marketplace, you can imagine it produces a great place for pharma to essentially advertise their branded sort of discount programs directly to consumers. So you're seeing like these different very, very expensive branded drugs that consumers would normally not be able to afford. And pharma, they have a channel to be able to advertise like these sort of discount programs that allow you to save a lot off that. So like if you guys know about Doximity or OptimizeRx, they also play within the same space. And it's really hot right now because of sort of pharma sales reps, like in-person sales reps, really sort of not being able to do their jobs because of COVID. And like a lot of spend in this traditionally in-person sort of industry is now shifting to digital channels. So just to give you an overview of how they make money, I sort of explained it a bit before, but essentially the consumer, they go to the pharmacy collects sort of like this admin fee or this fill fee. The PBM gets a portion of it, but the majority of the fill fee goes to Goodrx. So that's per transaction. And like, let's say, you take your code from your Goodrx app and then you go into the pharmacy. When you use it, that's being saved. So that's like next time you come in, you don't have to swipe again. You can just, like say, I want to buy this drug, and like the code will automatically be used. The pharmacy will automatically collect their admin fee, and Goodrx automatically makes money. So this creates sort of a very recurring revenue business because of the fact that like around 2/3 of people in the US are on maintenance drugs. And what this means is that these people have chronic conditions. They need to go to the pharmacy every single month in order to get their prescriptions. And like every single time they go there, they are using Goodrx. So it creates for a very stable business, and you can see that reflected in their numbers. They grew at like a 50 to 60% CAGR over the past, like since 2016. And even last year, they grew at around, like I think it was like 40% or so, like year over year, even during COVID, when provider visits were down like 80% at some point. And then for their subscription revenue, same thing as I mentioned, like a $6 per month fee for individuals, $10 for family. For the pharma solutions business, around 85% are these enterprise contracts. So like similar to like some of these subscription revenue, like SaaS companies, it's like 85% are these sort of enterprise contracts. And then for telehealth, it's like very low, per visit cost, like around $19 for Go subscribers, around $40 for other people. And I think one of the main misconceptions around Goodrx is the fact that they're mostly for uninsured people. So this is not the case, because around 55% of the time, Goodrx prices actually beat copays. And this is for, and when they beat copays, you're saving an average of around 52% for the top drugs. So it can be quite useful for people even who are on insurance. And if you have especially like a very high deductible plan, so what this means is that, like you have to meet a very high deductible or like sort of like an amount before you're able to, take advantage of your copays. That's when, like Goodrx can especially help people, because like you don't want to pay full price before then, right? You want to sort of take advantage of these lower cash prices. I mean, these lower, PBM kind of insured prices than the inflated cash prices that we talked about. So that's why, around 70% of their business is actually insured people. And I think over time, it will continue to be even more relevant for insured people. And the reason for that is because of the flywheel that's improving their prices. And this is a big source of competitive advantage. And the reason why I like the business is because as they gain scale, they essentially get leverage over PBMs to be able to improve prices. The way that works is that Goodrx is the only prescription marketplace. So they are the only platform that multiple PBMs can compete against each other in order to deliver better prices for the consumer. And once like sort of a PBM gets on a platform, they are able to adjust their pricing. So, like currently, not all PBMs give Goodrx the best price, like the best possible prices that they can, because, they recognize that Goodrx is kind of, it's not the, like it's sort of a love-hate relationship where Goodrx the stronger it gets. Like they don't really like PBMs don't like it when insured people use Goodrx, because when someone is on your PBM plan and they're using Goodrx, you make less money. You don't collect the rebates, you don't collect sort of the spread, and that's where PBMs sort of dislike Goodrx. Where they really like Goodrx is when an uninsured person uses it, or those 20 to 30% of prescriptions that are left at the counter because of price. So that's when PBMs are actually making money, because like those people were previously a population that they couldn't access. And like even if like an insured person uses it, like it's all free money to the PBMs. But at the end of the day, like they don't really like it when insured people use it. So it's kind of love-hate relationship, and that's where the larger PBMs, which have the most to lose, they don't give Goodrx the best prices. The smallest PBMs, because they don't have a lot of members, they don't have a lot to lose, they already give Goodrx the best prices. So that's why you see like smaller PBMs forming like over 10% of Goodrx's revenue. And what happens is that, because they get better and better prices from the smaller PBMs, that attracts more and more users to Goodrx. And because more and more users means more and more potential revenue, these larger PBMs, they are going to give better and better prices to Goodrx. So you're already seeing that happening. I think around, the average discount was like 59% back in like 2016. It's now 79%. So it's like you're definitely seeing this trend of improving prices, and you're definitely seeing this trend of it being more and more relevant to insured consumers. And that's where gives Goodrx the pricing advantage that no other competitor is able to copy right now. And combined with the fact that they have the absolute best go-to-market engine in the space, basically they not only have the best brand, the most well-known brand, but they also are able to partner with pharmacies and providers to be able to get even more mind share. So like pharmacists, if you go into pharmacy, they'll have the Goodrx app downloaded. If you go to your doctor, they'll recommend Goodrx. Like 68% of doctors have recommended Goodrx in the past. And it's going to get even more well known, because they're doing like all sorts of different initiatives. Like they recently partnered with like SureScripts, where doctors can immediately see the prices within the EHR and be able to send that prescription directly with sort of Goodrx like coupon to the pharmacy. So that's what's resulting in Goodrx's huge market share. So if you compare app downloads, website visits, compared to the other independent sort of discount cards, you'll see that Goodrx has over 3/4 share. So this is quite significant, and they absolutely dominate. In terms of pricing, this chart below, provided by Silver Mount Capital, is showing that Goodrx has the best prices of all the different platforms. Like even Amazon Prime Rx, which a lot of people were potentially worried about, they have worse pricing because they are only partnered with one PBM. And like on the last earnings call, they actually said that only a couple hundred people were using it per month. So clearly, compared to Goodrx's massive numbers, you're seeing a lot more activity with Goodrx. So in terms of the numbers, they have grown at like over the past year, like around like 40%. It slowed down recently because of COVID, but they're guiding for next quarter, like still, I think they should do over 35% revenue growth going forward. Over sort of the next 5 years, like 30 to 35%. And 80% of consumers, as I mentioned, they use it per month, so they are recurring users. They have around 20 million people who visit their website per month. They have 90% 90 NPS, so this is very, very good. Like this is like only a few businesses like Peloton or Tesla have that kind of NPS score. And yeah, around like $631 million in last 12-month revenue. So it's not a small business. And in terms of the risks, I'd say, like this is just sort of an overview of some of the risks. I mean, like I'll highlight, I guess, the main ones. So I guess what most people talk about when they think about Goodrx is, obviously the threat of Amazon. Amazon announced last November that they were entering the space, and this obviously scared a lot of people because it's Amazon. But I think Goodrx, because of the competitive advantages that I mentioned before, they should be able to maintain much better pricing than Amazon going forward. And they should also be able to maintain mind share that Amazon won't find easy to copy. It's not just about because the main source of awareness for Goodrx unaided, it's not just about who can spend the most on advertising, because Goodrx has those relationships in place with pharmacists and providers. Amazon will never be able to replicate that, and they also won't be able to replicate the pricing. And Amazon is also mostly focused on sort of mail order, which is under 5% of the prescriptions in the US per year. So it's still like a very, very small segment, and it's not really growing. Other risks are regulatory. That's what people also talk about. But that, I think, mostly most of the regulatory risk is concentrated in branded drugs or Medicare. So in terms of branded, that, even though branded is around, I think 80% of total spend, it's only 10% of volume. So 90% of volume is generics. And that's where I guess Goodrx makes most of their money, because that's where they provide sort of the most discounts. And that's of course they collect, a per prescription fee. So that's where they make most of their money as well. And regulation on branded drugs, it only affects sort of the top, most expensive drugs. If you look at the stats, I mean, you'll find that the drug prices that we complain about all the time in the US being crazy, that's mostly due to these a select handful of very, very, very high priced branded drugs. If you look at generics, it's actually not that crazy compared to other countries. So that's where most of the regulatory attention is focused on, as well as Medicare. Medicare is around 34% of Goodrx's user base. And the government has taken steps to make Medicare accessible to more people, which would benefit, Goodrx. It would also, the government has also focused on ways to potentially, limit out-of-pocket spending for Medicare. But all of that regulation, it's proceeding very, very slow. It's always talked about, but nothing ever happens. And I don't think that things will happen, at least over the short term, because what benefits the PBMs also benefits Goodrx. And the PBMs definitely don't want regulation, so they will lobby against it really, really strongly. And Goodrx produces sort of a win-win solution for everyone. A win for the pharmacies, a win for the PBMs, and a win for sort of the patients. And in terms of the other risks, you can talk about chain pharmacies potentially leaving. The pharmacies, they're contracted with the PBMs, right? So they have to accept, as part of their PBM contracts, Goodrx. But they also get another benefit, and that's for every single script that's being filled through Goodrx, an average of $40 other of other items is being purchased as well. So these chain pharmacies are really, they just want to drive foot traffic, and Goodrx helps them to do that. You could also talk about stuff like PBM risks. So what if PBMs start to leave the platform? Well, I don't think that's likely, because of the fact that each PBM, they all essentially provide the same service to Goodrx. They all provide, prices. They can differ between different PBMs, but at the end of the day, they're replaceable. So I don't see that leaving, because if they're leaving, first of all, they don't capture the additional revenue to Goodrx. And second of all, a competitor will just come in and steal that revenue for them. So, I mean, it's also it's almost a no-brainer for them to be on Goodrx. And I guess to expand on the optionality, but beyond sort of their core prescriptions business, you can look at their manufacturer solutions business, so their ad business that I talked about. It's very, very underpenetrated right now. So they have around 10% of the 550 top US pharma manufacturers. And they are only in around 4% of the 1,000 brands of the top 20 manufacturers. So they made a conscious effort to target the top 20 and get them on board. because they represent, the vast majority of the potential revenue opportunity in the space, and they can sort of be sort of like a lighthouse client, like a reference client for the others, like adoption. So they're only in 4% of their total 1,000 brands. It's only a matter of time before they expand to more and more. Management has said that they expect the vast majority of them to be applicable to GoodRx. And they boast like around 3x year-over-year revenue growth and 150% net retention rate. So you're seeing pharma really spending a lot year-over-year to spend more on GoodRx. And then if you look at their financials, historically they've been they've actually made money. So this is like a very strong I guess like financial track record. This is a very capital light business. 95% gross margins. They recently invested a lot in terms of like their R&D, in terms of expanding out their different product segments. So that's why adjusted EBITDA margin has gone down a bit. And then in terms of like their 2020 loss, it's more so like due to the stock-based compensation, as you see, rather than like anything else. Which like I expect them to continue to maintain like a 40% free cash flow margins into the future. In terms of their valuation, I think that's quite reasonable still at the level compared to other like hyper growth companies. Yeah. Like I like to open it up to the floor for questions now. If you guys want to discuss some more of the risks, or if you didn't catch like my explanation of, I guess, how the core prescriptions business works.
Great, thank you. Awesome presentation. You certainly know your stuff very well over here, Rich. I was, as you were going, I was jotting down a bunch of questions, and you kept like answering all of them as you went through. I'm not kidding. You got everything. I wanted to ask about self-insured versus people who are uninsured versus insured. You hit that. All the risks, you hit that. So if you can talk a little bit more about valuation, though. What do you think? Do you think the stock is undervalued today? That I can see it better actually that way. Yeah, do you think the stock is undervalued today? And what do you think the potential, price target or something is for the stock next few years?
Yeah. So like sort of the way that I approach valuation is like I like to use sort of an expectations framework. So like really looking at what's being priced in today, and in order to achieve like a reasonable rate of return from here, like what needs to happen. So if like let's say my hurdle is like a 15% IRR, I think like with GoodRx's price today, they need to be like around like a $40 billion company by 2026. So like in 5 years. Let's say that they get 40% free cash flow margins, and they trade at 35% EV to free cash flow. They need to generate around $1.1 billion of free cash flow, and then that translates into around $2.8 billion in sales. So that's around like a 30% revenue CAGR over the next 5 years. And I think that's relatively reasonable. And if you look at what they've done over the past 5 years, and sort of the TAM in the space as well, because like the way I look at TAM is that like Goodrx, they talk about this like $800 billion TAM, which is crazy. But if you look at their core prescriptions business, around 5.4 billion scripts are sort of addressable in the US per year. And Goodrx, they have like, let's say the average cost per script is around $30. Goodrx has a 15% take rate. So that's like $4.50 per script. And then if you divide that $2.8 billion in revenue by 2026 by that $4.50 per script, that equals 620 million scripts. So they need 620 million scripts by 2026, and that's 11% market share. So I don't think that's too crazy. Like I think in like steady state, they'll be able to definitely get, I think like over 50% market share, because this is, a winner take most space.
Okay. I'm not sure I got it. When you look for like an investment, you said it's your largest position. So what kind of return are you looking for? I guess you're a long-term holder, right? Are you holding these
Yeah, I mean, like
stocks?
I'm just looking for, like over 15 to 20% IRR, which I think, can be achieved through
Mhm.
Goodrx for the next 5 years.
Got it.
I mean, like I'm not like I don't think Goodrx is gonna, be like crazy return like 50% returns annually from like this point on, because it's simply like too large of a business. But I mean, like in terms of risk reward, in terms of
Right.
the strength of the business and its valuation today compared to, like some of the other very high quality SaaS businesses, or like some of these other businesses, then I think, it's still like one of the most attractive opportunities. I think if you look at, short interest, it's like 22% right now
Oh,
over float,
wow.
which is, like it's obviously, I think, a very controversial name. I mean, I haven't, like that's why I spent, like a lot of time trying to understand the bear theses. But I think there's a lot of misunderstanding around
Mhm.
sort of the dynamics between the PBMs and Goodrx. People think that the PBMs are in a much stronger position, and Goodrx is just a middleman, or something like that. But
Right.
yeah, like I think it's very strong.
Cool. That's nice little tidbit of information of the short position. We do have a question from Jared. I'll get to in a second, but I'm going to share my screen for 1 second. I don't know. Can you see my chart? Is it showing? Hold on. Let me try that again. Let's just make this here. All right, so this should work now. All right, great. So this is what I was trying to show earlier with the chart. At StoryTrading, I try to look for a confluence of a positive, positive indicators on fundamental sentiment catalysts and technicals. And the reason I kind of invited you on to talk about GoodRx is because I noticed like the technicals starting to look up over here. And then I also noticed what I would think I caught as a change in sentiment from you, Rich. Maybe I judged wrong, but tell me, was there something different? Something in the last couple of months, maybe they had earnings, but was there some information there that made you more bullish on GoodRx just recently?
Yeah, so there were a couple of things, and like if you see on the chart, there was a huge gap up on their Q2 earnings back in August, and I think the main reason behind that was because like they had only met expectations, but the shorts were expecting them to miss. They thought that based on web traffic that it would be like a bad quarter, and it turned out to be okay. I think it was a very tough quarter because of COVID, and sort of people like are like provider visits have still not inflected the way that we wanted them to see after 2020, as well as like the bad news flow, like Amazon and recently Walmart also entered the space. But I think that quarter sort of shed some light that the business is, I guess, more predictable than the shorts were led to believe. I also think that management really stepped up their communications to the market. So they really broke down the manufacturer solutions opportunity that I highlighted. So this is their ads business. And like that, like talking about stuff like the potential like 4% of brands captured today, an immediate opportunity to expand to like the other 1,000 within those top 20 manufacturers, and then the strength of companies like OptimizeRx and Doximity that are also seeing this huge sales momentum because of this shift to digital ad spend. I think that's really opened some eyes that GoodRx could be a big play here, a big sleeper play here.
Mhm.
And like this very well-known fund like Abdiel Capital, like they also took like a 12% position in GoodRx.
Yeah, that's great. So I love it when the fundamentals back up what we're seeing in the chart. So you have that basically 50% move since earnings. You had this big positive candle in earnings, and it's kept going. It's at a pretty intriguing place on the chart. This is a pattern that often I think I don't know if I'm not a great technician, but I think that might be called like a cup and handle forming, and I don't know. It looks like it wants to possibly go to a $50 to $60 range, but it is already up 50%. It's a golden cross here over here as well. I don't know if you care about any of these things, Rich, but I just love it when you have the fundamentals and the story explaining what's going on with the chart action. And that's a great nugget you said about the short position and people not really understanding the story here. So I just want to, at this point, Jared, I have a question. for you. Jared, you there?
Yeah, I'm there.
Yep, go ahead.
So yeah, first of all, I want to say great presentation. That's a really huge amount of detail. So thank you for putting in all the work for that. I wanted to ask, are you familiar with another company called OPRX?
Yeah, I also own like a 7% position there.
Okay, yeah, great. They were my largest position last year. Unfortunately, I sold most of it during some of the lows this year in May. It was very poor timing on my part. Now, I know that the CEO of OPRX has said that they're not in competition with GoodRx, but I'm just kind of curious from your point of view, both like, do you view that these companies are as, stepping on each other's toes in any way? And how do you view the sort of risk reward of OPRX versus GoodRx? Because even though OPRX has still gone up a lot, it's obviously has a much smaller market cap and it's much less heavily covered than GoodRx. So do you think it is potentially a better, if not more risky play? Just kind of curious what your thoughts are there.
Yeah, I think, OptimizeRx, it benefits from the same tailwinds as GoodRx does in terms of the shift to digital ad spend as a result of COVID. I think in terms of competition with each other, that they don't really, step on each other's toes right now, but they could definitely have that risk in the future. So specific to GoodRx, I mentioned that they were, sort of trying to step up their pharma ad spend. And Goodrx is primarily like a channel for pharma to go direct to consumer, to target consumers in the app based on what they're searching for. So it's very much like bottom funnel, but with UpERX, for people that are unfamiliar, they essentially are in the EHR channel, which doctors use every single day, and they essentially provide these financial coupons on like these branded drugs when like they see like a doctor prescribing it within the EHR channel. So it's also like a very bottom funnel kind of channel, but it's targeted towards providers instead of consumers. So currently they're not competing. But what's interesting is that GoodRx is increasingly taking steps to like make themselves more familiar to providers. So this includes the recent partnership with SureScripts, which is an EHR aggregator. They basically partner with a bunch of the EHRs across the country, and it's sort of an e-prescribing tool where like a provider wants to send their prescription directly to the pharmacy, and then they're able to compare GoodRx prices to send it to like a right pharmacy with the most discount. And OPRX, like potentially in the future, GoodRx could try and get in front of the provider even more by like leveraging their existing pharma relationships to be able to push those coupons directly to providers as well. So like on branded drugs as well. So I think what's stopping them is that like they currently don't have the same depth of EHR network that OPRX has, as well as they're primarily focused on the consumer. So they're not like, this is not their focus, but it's definitely like a potential threat in the future. I think in terms of relative risk reward, I think that GDRX is like valuation is more attractive, but with OPRX, because it's only like a 1.4 billion dollar company, like it definitely has like a lot of room to potentially like continue to grow. Like I do think that GoodRx is in a stronger competitive position, so there are definitely risks there. And I like GoodRx more in terms of valuation right now.
Great. Thank you.
Thank you so much. I appreciate that.
Yeah, and I don't know, Jared, I'm just, if you don't mind, I'm going to mention a trade strategy that you've brought up to the attention of our community, which I think would work good with big caps. It just so happens to be a lot of the early people in the story trading community have preferred micro caps because of the potential larger gains. But if you apply the same research that we've done here and that in-depth research Richard has done on larger caps, there could be opportunities for huge gains. When you have strong conviction and you think there's a strong support level in a big cap like this, $17 billion, maybe there's some options plays out there. Nothing risky, nothing too risky out of the money, but maybe in the money call, something like that. Maybe a way to take advantage of that strong conviction, the deep research that's done in the community, And, you can capture, like if a stock's going to do 5%, a big cap, you can make a lot of money on that. Any thoughts? Did you want to share your strategy on that a little bit, Jared?
Yeah, let me go ahead and pull up the options on Robinhood and let me see what it is. Because yeah, if you, I think the best strategy on these often is to buy the first leg out of the money and then the second leg, or buy the first leg in the money and the second leg just out of the money. So let's pull up January of 2023. Let's pretend that you are buying a 47%. Sorry, let's just say you were buying a $45 strike price and then selling a 50. Right there, that looks like it would only cost like $1.80 or something like that, which is truly astonishing when you think about it. So 5 divided by 1.8, you're looking at 2.7x xing your money.
Wow,
Almost
really?
almost tripling your money just with the expectation that the stock's going to get to $50 in 2023. And you're also paying capital gains on that if you wait until 2023 to sell it, by the way. So now you can say something like, well, maybe you won't get a fill on that. Maybe you'll have to end up, buying it for $2, $2.15, whatever. It doesn't really matter. The point is that, yeah, if you are giving this 6 months to a year, just estimating that the stock's going to go up another 5 to 10% is definitely going to give you more than a double. This is a stock that has higher volatility. And one of the things that's really interesting to me is that normally when a stock has high volatility, options are more expensive unless they're basically like less good, right? But when you have when you're using a spread strategy, if you buy the first leg in the money and then sell the second leg out of the money, you're taking advantage of the stock's higher implied volatility to get a better price for your spreads. And that's how you're able to get these like insane deals using that strategy.
Well, that is fascinating. A lot of that went over my head, but anyway, thank you for that contribution. Richard, any other final words on this?
Nope. Yeah, like feel free, guys, if you have any more questions, to just message me on Twitter or anything like that. Again, like disclaimer, I own a position. My fund also owns a position, like Saga and Luca Partners, or like Luca Capital. But yeah.
All right, cool. And your Twitter handle is?
It's Richard_Chu 97.
Awesome. Thank you so much. And I want to let people know also, in our VIP community, we've opened up a WhatsApp group dedicated just to GDRX research. So you can collaborate in the GDRX research group. Hey, Rich, if you ever want to hang out with us in the WhatsApp for GDRX, let me know and I'll give you a special invite. So we got lots of events coming up. We have the CEO of Biotricity on Wednesday. Lately, we've been doing a lot of stuff on YouTube Live and on Twitter Spaces. So stay tuned, go to our website, and you can figure out what's going on with our events, especially if you follow us on YouTube and Twitter at StoryTrading. So thank you very much, everybody. We're going to stop our recording and do our trade of the week for VIP members. Thank you so much.